everyone, and welcome into CrushTheStreet.com. I'm joined today with Trader Stef. Popular Trader Stef, probably one of the most down-to-earth people in the alternative media that I think you will ever meet. And she loves what she does, and she does it with a passion on the front lines, following the metals markets, geopolitics, governments. And she's here to shed some light on what could only be described as chaos in our system. And you can follow her at Trader Stef on Twitter. And look for exciting things to come. I've been talking to her, and she's got a lot of things in the works here, a lot of exciting things. Trader Stef, thanks for joining me.
Hey, thanks for having me. This is exciting. What an event with the 2000 election, huh?
Well, against all odds, and I should put that in quotes there, Donald Trump is our president-elect.
Donald Trump, just last week, he confirmed to the National Review that he is again considering a run in 2016.
Do it. Do it. Look at me. Do it. I will personally write you a campaign check now on behalf of this country, which does not want you to be president, but which badly wants you to run.
Which Republican candidate has the best chance of winning the general election?
Of the declared ones, right now, Donald Trump.
And although many are adamantly trumpeting that he's not our president, he is. And first of all, it was the media lie underestimating the polls and the percentage of voters. And think about it. Was it really the media lies, or was it the people just embarrassed? At least that's what the media is now saying, shifting the blame to embarrassed closet Trump voters. Of course, he's been labeled as a racist, as a misogynist, and actually we've seen that a large portion of minorities and women actually voted for him. And maybe it was these people that were potentially embarrassed of voting for him, because it was certainly not popular to be a minority or a woman to be voting for Trump. But any thoughts on this, Steph? Yeah, what do you think?
Oh my God. Yeah, there was definitely this segment of the population that did not want to say that they supported Trump, no matter what their personal feelings were, because of all the violence that was going on. But look, enough said. In the last interview, you asked me about the election in Soros, and I gave you 3 ideas. I said WikiLeaks, Clinton Foundation, and Soros. It's like Bonnie and Clyde, right?
Mm-hmm. Yep.
So many things that happened during the election that we could talk about, but it really boiled down to about 1 week. And in August, Trump's rallies started to grow exponentially. He was having like 20,000 people at those rallies. And I put a tweet out. I said, look, ignore the polls. What do your eyes tell you? And then on September 9th, Hillary made the big mistake of having some private event in New York, and she called all the Trump voters bigoted deplorables. And it was like, wow. So this new piece of artwork came out in the next day in a Trump rally, the Less Deplorables. And if anyone saw Les Miserables, the play, you get the point. And then September 11th, at the 9/11 memorial, Hillary takes a fall. She left the ceremony suddenly, and then she literally got carried into the van. And then there were all these conspiracy theories about what was going on. Forget all that, because it was the initial shock, because it went out to the public. And then on September 12th, Trump had a press conference, and he had 12 Medal of Honor endorsements and 120 generals and admirals. It was just like, wow. So September 14th, I put out a tweet, and I'm like, this is it. He's got it in the bag. And then things started to get a little weird. And don't forget the Brexit tie-in, because he ended up having Nigel Farage at one of his rallies. It was just the most beautiful thing. So at 1:36 in the morning, AP made the final call when he took Pennsylvania, and that was it. So some of the headlines that took place since the election: Putin on Trump victory, Russia is ready to restore relations with the USA. A new constitutional law expert confirms that Trump's quote-unquote Muslim registry is not illegal. But remember, he didn't advocate separating people by religion. It was by terror states, high-risk areas where people were coming into the country.
Ideology.
Ford CEO folds. Trump confirms car maker won't move Kentucky production to Mexico. Japan's Abe says Trump is a leader we can trust, and he gives him a golf club. Like his grandfather did for Eisenhower, just really blowing people away. Jesse Jackson comes out, and he tells Obama, give Hillary a blanket pardon. Hey, wait a minute. I thought that she didn't commit any crimes, right? Wasn't that, the story?
That was the story.
Money is already available for the southern border wall that was put into bill but sat on the side, and it was never used. So then we get the crybabies.
Now, I did a commentary a few years ago listing the history of left-wing violence in America, and right now I offer a refresher. You don't see that it's you Democrats, you socialists and communists and left-wingers who believe that your comforts should be at the forced expense of others are the same as the Democrats who represented the Confederacy. And it's really frustrating how you don't see how you're screwing things up for everybody else, and it makes me want to pound on my frustrations like, Notice how I pounded out my frustration without destroying somebody else's stuff or inconveniencing anybody? Maybe one of these days when you're all grown up, you'll try it sometime, Your belligerent behavior is the same as John Wilkes Booth, the Democrat who shot Abraham Lincoln. You're going down the same road as the Democrats in 1866 who attacked the Republican convention and killed 40 blacks and 20 whites and leaving 150 injured.
The pro-slavery Democrat Preston Brooks tried to beat abolitionist Republican Charles Sumner to death with a cane.
You're showing the same lunacy as the communist Charles J. Guiteau, who shot James Garfield. Notice how it's these left-wingers who are the perpetrators of gun violence, but they don't like for other people to have guns. Democrats haven't changed. William McKinney was killed by Leon Czolgosz, Democratic anarchist. Yes, Democratic anarchist. As usual, Democrats were confused then, and they're contradicting and confused now. John F. Kennedy was killed by Lee Harvey Oswald, communist. Giuseppe Zangar, the left-winger who took a shot at FDR. Left-wingers are like cannibals, man. They'll take a shot at their own party, too. Pedro Abizu Campos, the left-winger who took a shot at Harry S. Truman. Malcolm X was shot by black nationalists, socialists Talmadge Hayer, Norman Butler, and Thomas Johnson. Left-wingers. Martin Luther King was shot by James Earl Ray. Democrat. You liberals literally let Democrats get away with murder, man. Gerald Ford by Lynette Squeaky Fromme, a follower of Charles Manson. Left-wingers. The second assassination tip came from Democrat activist Sarah Jane Moore. Ronald Reagan got shot by John Hinckley Jr., another registered Democrat. I don't have time to read off all the rest of the names for you, but here's a continued list for you. Share this video so people can get a rundown of the history I gave you and this list, so that other people might see it who think that they might want to support these nuts and then be like, wait a minute. If I support these people, then I'd be following the same sanity-impaired pattern of these people who think that they can solve things by behaving insanely. These people belong in a rubber room. But these people don't mind going to a rubber room because they think that a rubber room is a room well stocked with condoms so they can have a responsible orgy in it.
And we're starting to get all these protests, and they're violent protests. It's just really horrible what's going on out there. And as far as the popular vote, look, there were approximately 3 million illegal immigrants that voted because Obama said it was safe to do so. That flipped the popular vote.
So post-election, Steph, these liberals who've been holding rallies during the Clinton campaign, holding peace signs, love, and stronger together, are now on the streets all over the country burning shit down, vandalizing property, blocking freeways and streets. And I must say, it's insane. In California now is even talking about seceding from the union like a bunch of whiners. And honestly, good riddance, California. I mean, 2.5 million more people actually voted for Clinton in this state. Of course, California is only 12% of the entire population, but nearly 40% of the entire country's welfare recipients. That kind of goes along with your 3 million illegals voting in this campaign here. But, man, what a divide in this country, and, what is going on?
Yeah, it's kind of scary, and we talked about it a little bit in the last interview, and that's Soros. And look, there was actually a video clip that came out recently. It was a 60-minute interview that he did, and they asked him questions about his role, when he was 17 years old in World War II, when he was turning in his neighbors, and he, said he had no remorse of that. That is kind of psychopathic. I mean, how can you not have remorse? Even if you were doing it to save your own life, you would still have some kind of guilt about it. But he expressed no guilt whatsoever on that interview. So remember when Hillary lost the election and she never came out to all those people that were at the Javits Center?
Oh, she thought she had it in the bag. She presumed that she won.
Yeah. But then she came out, she had a private announcement the next day, and her and Bill came out with Kane and his wife, and she was wearing purple, right? And Bill was wearing a purple tie. Now, what that's all about, whether unconsciously or consciously, there are a couple things going on. But the purple revolution is what Soros is pushing. And that's the open society, open borders. And he wanted to blend the red states and the blue states and turn them to purple, right? So look, purple signifies royalty in the Bible, at least. But it also signifies jealousy and the jealous ambitions of power. So that's a very interesting juxtaposition with regards to the Purple Revolution and what it means on, you might want to say a moral level.
Wow.
A religious level. But the inherent justice to God as the Messiah had to suffer first in the crucifixion. So here she is being crucified, wearing purple, promoting the Purple Revolution. and right. And so now we've got Soros. He comes to Washington this week, and he spends 3 days, and they're having this meeting. And the title of the news article is Soros bans with donors to resist Trump, take back power. Like, are you kidding me? Why isn't he being arrested by the FBI in Washington while he's here? Because he's basically promoting treason to overthrow the country through violent protests.
But wait a minute, Stef. You're talking about blending red and blue states and making them purple, but he's promoting a division, racial division, and there's a complete disconnect from this globalist, everyone loves each other and gets along here.
Yeah, and the worst part, he's paying the protesters. I mean, the advertisements are out there, whether it's Craigslist or in some other venues, $15 an hour, plus you're getting bennies.
Oh, God. Well, I mean, it's insane what we're seeing here in this election. But you know what? There's some upside. At least we had some outsider come in, shake things up a little bit. Whether or not Trump actually does it, I mean, we are seeing him being a little more establishment friendly. Not being so hardlined as he was during his campaign, and maybe that's just part of his strategy. I mean, his talking now with Mitt Romney. Obviously Paul Ryan and Ryan's Previs, and even a Goldman Sachs appointment in his cabinet here. So, I mean, any thoughts on that? I mean, what do you think? Where do you think Trump's headed with all this?
I think he's going to be. There's always going to be decisions that people make that you're not going to be happy with. That's a given. But in the bigger picture, his cabinet is going to be diverse, and he's going to place the people who have the strength where it needs to be applied. So I'm not going to get into the whole debate. I mean, not necessarily in the interview, but I'm not going to concern myself because I trust him. I really do.
Steph, let's move on here. The Fed, Treasury bonds, liquidity. Right now, last I read, where there's a 90% odds right now, the Fed is going to be raising rates here in December. And when you listen to Stanley Fischer here, he's all over the map, no direction, no certainty. And we know the Fed has just gotten done printing, multiple trillions of dollars here since 2008. So explain to us, how is it possible that there can be a liquidity problem with the system just having so much money injected into it?
Coincidentally, Stanley Fischer had done this interview and Q&A at the Brookings Institute this week. And we had discussed this, I mean, not about Stanley Fischer, but in the last interview, I said the problem is going to be liquidity. And that's become the meme with the central bankers, and that's all they're talking about. And when Stanley was being questioned at the end of his speech, they only allowed 4 short, quick questions, and he refused to answer all of them.
Short-term rates are high enough now all of a sudden that where we were used to negative rates, we're now looking at positive rates. Is that a slow-moving liquidity crisis?
Basically had a decline in short rates and a lot of rates of about the magnitude we're seeing being reversed right now. Anyway, I'm not going to comment on when we will be ready to intervene, if we'll ever be ready to intervene and things like that. So in part because I don't know what the answer to the question of when are you going to change policy is, and if I did know, I wouldn't tell you, so you don't know whether I know.
You talked a little bit about liquidity in the cash markets, and what I keep hearing from the professionals is that the liquidity in the derivatives market is much deeper, and that it's much easier to hedge positions quickly or to take positions through the derivatives market than through the cash markets. And I wonder how you look at those two together in trying to assess whether we have a marketplace that's viable and won't be subject to some kind of emergency response.
Well, what happened in the derivative, everything goes back to day one, which is September the 15th, 2008. There were a lot of things in the derivatives markets which had to be fixed and which are being fixed. When they get fixed, we're making progress in that regard. Will it look reasonable within another 6 months? Yes, I think so. Will I regret that I ever said this? There's some probability. There's some probability that's true.
That the spreads are improving in the volume. We do often also hear that blocks are much smaller. We also hear that it takes much longer to trade. We also know that there are many fewer market makers now. So maybe also just building on Hal Scott's comment, when the QE slows down, when the rates normalize, we do wonder what that's going to mean, and we do wonder if we're going into a period which is going to be more dangerous.
Yeah, I mean, you're entitled to wonder. We're entitled to try to be prepared for dealing with such situations if they were to arise. And that's about as much as I want to say.
Yes, there's a question here. Again, please identify yourself.
Good afternoon, James Fishback with McRavoy & Partners. Mr. Vice Chair, are you at all surprised by the dramatic repricing of longer-term yields in the U.S. over the last week and what that may mean for the Fed over the next 8 to 12 months?
If the question is, am I surprised that the interest rates rose that quickly? If you gave me the conditions under which it happened, not especially, but if you were to tell me, I can't separate that from was I surprised by the election results.
No, it's not a political question.
No, I don't think it's political. I'm just telling you that there is a big. I'm surprised by something that happened.
The reality is, sure, and this is something that I've had to wrap my mind around because we've printed so much money. What is $3.4 trillion since 2008? We've expanded debt to a degree that we haven't even seen before. So even though there's been base money printed, I mean, if we do see a financial crisis, I mean, there's going to be not enough money to chase all the debt that needs to be paid. And that's what I think a lot of people aren't seeing. And that's where you get the deflationary shock, initial shock at least, until the money comes pouring back in. The helicopter money, the QE, and the response with ultra low, zero, and negative interest rates. So a lot of things on the table here. What are your thoughts with Trump and Yellen and the collusion of them two? I read a zero hedge headline that you forwarded me. It said something along the lines of Trump. What did it say here? Trump's mandate to Yellen: print more money or you're fired. What are your thoughts?
All right. This is perfect because this ties right into the taper caper and the FOMC, Yellen, Fisher, and what Trump's policies are going to be. So let's go through this, and then we can hit the gold chart and silver chart. If the economy does well, Trump takes the credit. If the economy falters, he can say it's the Fed's fault. And even though Trump's hands were tied, he was right the whole time. So no matter what, it's a win-win for Trump. Now, I think Trump will actually start to work closely with Yellen and Fisher and the Fed overall, seeking more physical stimulus to promote his policies, right? Because he's a debt man. He's the debt king. And having the low rates for the debt is really important. And I'll get into that in a bit. But
I don't know if I agree with you on it's going to work out for Trump. If things crash on him, I'm sure the media will figure out a way to paint him as a failed policymaker. Free market capitalism doesn't work, and I don't see them letting him get away with that as it wasn't his fault, as Obama essentially is getting away with.
Oh, well, the mainstream media is not going to let him get away with it, but we've seen how that has went over the election, right?
Oh, yeah.
And look, it will only serve to devalue the U.S. dollar through heavy inflation. Because in order to do what he needs to get done, the Fed cannot continue on the policies that they're saying that they're going to propose. They're going to have to step back. It was a one and done, in my opinion. So let's just take a look at a couple of the headlines that came out today. Stock surge on biggest short squeeze since Lehman as bond bloodbath begins again. Now, remember, this surge, let's just talk about the Dow, but it applies to all the indices. There's no volume on this surge. There's illiquidity. There's no liquidity. Bullard says one hike per year is almost nothing and too slow to be categorized as normalization. So the 2017 outlook is unchanged, and any change from the new administration would only impact 2018 and 2019. And one more, holiday spending forecast at risk as blue state shoppers suffer post-election shock. The crybabies don't want to spend any money. So let's look at interest rates.
They're on the streets.
Right, when interest rates, let's get this straight, real interest rates, the difference between inflation and what the interest rate is. That's what real interest rates are. And when you do charts and compare that to gold, it's not always 100%, but gold does go up while rates are rising. I mean, one example is 1979, 1980. But look, this economy in this world is not 1979, 1980 now, but it has happened since then as well. So let's just take an example of, let's take the year 2003, June 30th, up until the year 2007, June 30th. The Fed funds rate went from 1% to 5.25%. The gold price went from 346 to 651. So one example. So look, Yellen is like she's talking to all the dancing bulls. They're doing the two-step, and she's saying one thing, but it really means another. And the bottom line is that all the data is bad. It doesn't matter how you slice it or dice it. All the data is bad. So we're living in a depression, and that's why Trump took the White House.
Yeah.
And the mandate is like, print money or you're fired. And she said she's not going anywhere. She's sticking around. So they're going to have to compromise, and he knows it. And if you're going to print this money, you got to lower the rates, because we cannot afford to service the interest on the debt if we go beyond 1 point in rate in hikes. It's just not possible. It's going to fall apart. So the new 10-year Treasury yields are up 65 basis points since the Trump win lows. So it's spiked up to 2.35. And generally, when you put the 10-year chart right against gold, that's where you see the correlations. And it's not exact all the time. There's some variations in it, but that's if you want a correlation on your gold chart, it's the 10-year Treasury. So after the Brexit, look, what's most important really, because we could talk about 100 things with this, but there are a few events that are coming up.
Oh, big ones.
Right. December 4th, we've got Italy's constitutional referendum if they're going to leave the EU. So we have another Brexit coming.
What do you think the establishment's thinking about that? I mean, they're 0 for 2 this year with Brexit and Trump.
Oh, it's a big problem because, well, let me say one more thing. On November 28th, the Bank of International Settlements is having a meeting about capital needs and risk weighting. So they may be changing the capital requirements for the banks, which they're already talking about doing that in the United States over the past couple of days. And the banks are not happy about that. And will the Fed be reticent to raise rates with the recent surging U.S. dollar, by the way? You know, so there's so many things that are forcing them to not raise rates. There's so much going on, and sometimes it's hard to really just dissect it all and just look at the big picture. So what was your question?
Well, the establishment's 0 for 2 here. So we got Brexit, we got Trump. You know, what are they preparing for? Are they prepping Italy for this? Are they going to fight this tooth and nail? What's going on?
Well, I'm going to have to throw this over to Jim Rickards. And he's got the new book out, The Road to Ruin.
Uh-huh.
And the underlying common denominator in that book is the ICE-9 plan. And it's about a water molecule that was designed that you throw into the ocean, and then it affects all the other water molecules in the ocean, and they all get infected. Well, that's the kind of thing that the Italy referendum could cause. And when we start talking about the gold chart, we're going to talk about India and what's going on there. So there are a lot of little snowflakes starting to roll down the mountains, and I don't think the Fed's really going to be able to do what they say that they think they're going to be able to do. And Stanley Fischer's refusal to answer those questions, I think is a pretty clear sign of that.
Well,
we still have different events to go through until we even get to the December meeting.
Steph, we got the snowflakes here, Saudis, China, dumping U.S. Treasury bonds. Any insight on this?
Yeah, who's going to continue to buy them?
I mean, the central banks, right? Maybe the IMF. That's the next step, according to Rickards.
Well, no. The Fed's going to have to step in and buy them and monetize them. Look, that just ties in with what they're really going to end up having to do if Trump really wants to push this stimulus plan that he's got. They got to keep rates low and monetize more debt. And if we got to buy up a bunch of treasuries, hey, more the better. Perfect. I mean, look, I'm not saying that that's the right thing to do, but look, things are so bad, have gotten so bad, that we're going to have to go through a lot of pain for a period of time in order to come at the other end. And, you know, just because Trump got elected doesn't mean that all of a sudden everything's going to turn around and be okay. No, this is a carrier, the Titanic that needs to be turned around. This isn't some little speedboat. It's huge. So there's a lot of work to be done. So I don't think selling you gold or silver right now is a very good idea, just because the markets are rallying and the computer algorithms are firing off.
Steph, we gotta move on to precious metals here, and let's start off with gold. And many precious metals investors are wondering what the hell is going on. We are now closer to 1,200, almost at 1,200, and potentially going lower here. What are your thoughts?
Yeah, talk about the royal flush, huh?
Mm-hmm.
The average cost of production is right now around between $1,200 and $1,250 an ounce, depending on what country, which mine, which exchange, currency exchange you're talking about. But that's basically where we're at, between $1,200, $1,225, $1,250 an ounce.
Yeah, we're down to zero profitability for these miners.
Yeah, we're right in that zone. So this is low risk, high reward. It's below the 1250 zone that I, would have preferred. But hey, you can't have everything. The market's going to give you what the market's going to give you. So, look, back on October 4th, there was a big takedown by the COMEX, and that was when we had that flag pattern that we talked about in the last interview, and that was the first mini puke. And lo and behold, that was the week that China was on holiday for a week. And the ISM manufacturing PMI report came out that was better than expected, and the U.S. dollar started surging.
Yeah.
And that was the opportunity for some commercials to cover some shorts, and we got that mini puke. As soon as the COMEX opened at 820, it started. And that was the first drop, and we went all the way down to 1250 after a couple days. And then we come to the Trump event, and that was like a wash and a rinse episode. Gold spiked first initially, and the U.S. dollar was falling. But when reality set in, and look, I'm only talking reality of computer algorithms, because remember, 85% of the market is computer HFT and algorithms. It's not real people pushing the buttons. There was a big selling episode, and we got a big plunger candle, which was like, I was looking at it, I'm like, oh no, this doesn't look good. We got to get a bounce here, otherwise we're going to go down further. And that's what happened. But look, the physical markets in gold were not affected. It was all paper being exchanged. And what's happening is that these new physical exchanges are starting to come online, particularly over in Asia, and that's sapping liquidity from the paper market. All right, so that 100-to-1 ratio, 100 contracts, 100 ounces to 1 ounce contract,
right,
is starting to fade. And look, we're going to have more aggressive physical policy from Trump, which is going to create demand and inflation, right? So if the Fed raises rates, higher inflation should keep real rates low, and that'll support the gold price. And if the so-called protectionist policies that Trump has threatened, like tariffs on China, and triggers a trade war, U.S. exports could suffer, and that would create more of an economic slowdown, and that would lift gold prices. So, and then there's Soros.
Yeah. Big
So
Soros.
Right, but the headline is he doubled down on his Barrick gold position. It was a Momo play, just like the Momo play was on the gold shares. Now he's in a gold miner. So he's buying where there's blood in the streets, just like Buffett.
Yeah. Well, and he has also shown some credibility in terms of his trades, selling essentially at the top, and now he's buying back in. And, as much as we don't like the guy and, his motives, he's been successful in his trades.
Yeah, and look, and now we got the thing going on in India, which also ties into Jim Rickards' book, where the war on cash suddenly got launched on November 9th during the election, where they decided to pull in some notes because they're trying to eliminate, just like the bankers were saying within the past year, they want to eliminate corruption. Look, the bottom line is that they want to get you full digital to tax you and keep track of what you're spending and when. That's what this is about. But that created a major gold spike over in India, and people started buying gold. And now India's talking about maybe stopping gold imports. I mean, it's a mess over there. I mean, if you just think about the farmers in the markets who were trying to sell food, there's a liquidity problem. There's a cash liquidity problem over in India on top of it all that it's creating. So it's not really a good thing. So it's kind of like the economy is starting to grind to a halt because of this. And then, we got a couple articles coming out. Sweden begins planning transition from cash to digital currency, and the war on cash intensifies. Citibank is going to stop accepting cash at some of its branches over there. So that is so ICE 9 plan. Not funny. One infected water drop dropping into the ocean, you get the contagion effect. So who's next is the question. Is it going to be Italy?
Well, it would appear so. Steph, let's get into the gold charts and precious metals here. Take us away.
All right. On the weekly chart, real quick on the weekly, I just wanted to point out those two long-term trend lines, the one from 2011 and the one from the drop in 2013. We broke out from the one from 2013, and as we said in the previous interviews, we had to get through that 2011 topside trend line decisively, otherwise there was going to be resistance. And we ended up breaking out into a flagging pattern. So if we move on over to the daily, we get down in some of the nuts and bolts, some of these details. we can see where we had that run and it flagged out. And then in October, we had the breakdown when China was on vacation. That eliminated the flag. And then we got a nice bounce, a real nice bounce off the 1250 level. And it spiked up, and we got that hammer candle where that long wick is sitting there that goes all the way back up to 1340 during election night. And then it crashed back down. But what that has set up is a nice, big, fat, descending, broadening wedge. And descending, broadening wedges, their percentage of upside potential is like 79%. And downside potential is 36%. So it's almost the same playbook as the megaphone pattern that we had on the initial run-up from December. So I'm still bullish, but we've got this support has got to hold, and we ran down to the 500-day moving average and the 300-day moving average, and there was a burst of volume back in February 23rd through the 25th. That's what's holding us up. That's where we're at.
Steph, I love what you said about the percentage of chance that this formation means for gold here going up, and I'll be really curious to see what happens here going forward. Let's talk about silver. You sent me some charts here, and what can we expect with that?
Yeah, so on the silver weekly, I just want to double back just for a moment on gold. There's one word of caution here, it's to the negative side. The HUI, the HUI, the gold bugs index, that actually has a long-term head and shoulders pattern where the neckline was broken through to the downside this week. So that's a word of caution. Doesn't mean that we're not going to bounce, but we got to let this price movement over the next couple weeks and these events that are coming up play themselves out. So if you look at the silver weekly,
well, I could tell you, even as not a technical trader, it definitely feels very volatile right now, and that anything is possible with the price action here. I mean, it seems very likely now we can go into the $1,100 range.
Hey, look, it's possible, but as we discussed, we're down into cost of production. And we flipped, we're not going to see the commitment of traders reports until the end of the day today, but that will be very telling. So, there could be some further downside, but I think it'll be shallow if it does, because we've already went down to 1202 as of today.
Yeah.
So on the silver chart, lo and behold, we've got a descending broadening wedge on the weekly on the silver. So the same rules apply. And we've got some support sitting there on the silver chart. Let's go right to the daily and get down to the nuts and bolts. So there's your descending broadening wedge on the daily. We broke through that trend line that was in place since the December low. But your note there on the bottom left, there was an inverse head and shoulders that we broke out of in April, where then we got the push up. Well, that is right. We're hovering right above that neckline. I drew the black line and extended it over to the right, and that's sitting right down below where we are now. But we got the 300-day moving average, which it only matters when it matters, and the 500-day moving average. I always get that question, well, why do you use that one? Because it matters when it matters. Today it matters, and you can see it right on the chart. So we never did get past that $21.13, the high that we put in. And then we had the 21.34 and the 21.49 going back to March of 2008. Didn't happen. So we got to deal with what we got. And the only positive thing about this chart is that it is a descending broadening wedge. It looks like we're definitely in oversold territory. And we've got some support areas here. And those daily volume bars are falling off really fast, the same way they are on the gold chart on the daily. So there's some pain here, but if you sat on the sidelines, it's a buying opportunity. And look, I jumped into the market election night and picked up some silver coins. So yeah, okay, it was $1.50 above the spot price than what it is now. So what? I picked up a lot of silver way before that. So it's dollar cost averaging. You can't be right all the time.
Yeah, no, that's great advice there. Stef, always a pleasure speaking with you. And, always amazes me just listening to you open up your mind to us and just share what's on it, because you're just full of facts, full of knowledge of history regarding politics and the precious metals, the economy, and so many things. But if there's anything else that you'd like to leave the audience with here before we say goodbye, please do.
Yeah, it's going to be volatile. Buckle up.
And if people want to follow you, what can they expect to find?
Twitter, at Trader Stef.
All right, Trader Stef, and everyone listening, thank you so much for tuning in. Thank you, Stef, for coming on the show. I really do appreciate it. And I look forward to many more conversations with you and following up with you on all that is going on. So thanks so much.
Yeah, thank you for having me.